2026, nothing crashes. No alarms, no breaking news. Banks stay open. Markets still trade. Life looks normal. And that's the problem. Because the most dangerous economic collapses don't happen with explosions. They happen quietly. While people are still working, still paying rent, still wondering why everything feels harder than it used to. Right now, the global financial system is carrying over $300 trillion in debt. Not billion, trillion. That number is so large, it barely feels real anymore. But here's the truth. This debt cannot be paid back. And yet, nothing is being reset. Nothing is being fixed. Instead, the system is doing something far more dangerous. It's pretending everything is fine. By the end of this video, you'll understand why this debt exists, why it can't be removed, and why the people in charge are trapped inside the very system they created. Because what we're facing is not a crash, it's a slow financial erosion. Most people believe inflation is the real problem, that prices went up because of bad policy, supply chains, or temporary crises. That story is comfortable. It's also wrong. Inflation isn't the disease, it's the symptom. The real disease is debt. And to understand how we got here, we need to rewind, not to a headline, not to a crisis, but to a decision that quietly changed the entire world. To understand how debt became the foundation of everything, we need to rewind. Not to 2008, not to the pandemic, not even to the dot-com bubble. We need to go back to 1971, a year most people never think about. But one decision made then quietly reshaped the global economy forever. Until that point, money was tied to something real. Gold. Governments couldn't print endlessly. Debt had limits. Then, those limits were removed. The world shifted to a system where money was no longer backed by value, but by trust. Trust that governments would act responsibly. Trust that debt would remain manageable. It didn't. From that moment on, growth became dependent on borrowing. Governments borrowed to grow. Corporations borrowed to expand. Consumers borrowed to survive. Debt stopped being a tool. It became the engine. For decades, this system appeared to work. Markets went up. Living standards improved. Crises were patched over. Every time the system broke, more debt was added to fix it. That worked, until it didn't. Today, global debt is larger than the global economy itself. Governments owe more than they can repay. Companies survive on cheap credit. Households are stretched to the edge. And here's the part most people miss. If this debt collapses, everything collapses with it. Pensions, banks, governments. That's why it can't be allowed to fail. The system is no longer designed to be healthy. It's designed to survive. And survival requires one thing above all else: more debt. This is where the real trap begins. At this point, a logical question appears. Why don't governments simply fix this? Raise rates, reduce spending, pay the debt down. That sounds reasonable. It's also impossible. Because the moment interest rates rise too much, the system starts to break. Governments can't afford higher interest. Servicing their debt becomes overwhelming. Corporations collapse under refinancing costs. Layoffs begin. Consumers default. Housing markets freeze. But if rates stay low, inflation accelerates. Purchasing power erodes. Savings quietly disappear. This is the trap. Raise rates, and the system breaks fast. Keep them low, and the system breaks slowly. Central banks know this. They are not incompetent. They are not blind. They are trapped. Every decision they make creates damage somewhere else. There is no safe option, only delayed consequences. So instead of fixing the problem, the strategy becomes delay. Extend. Restructure. Inflate. The goal is no longer prosperity. The goal is stability, or at least the appearance of it. This is why nothing seems to collapse, and why nothing truly recovers. The system isn't healing, it's being slowly diluted. Value doesn't vanish overnight, it leaks. And that leak is felt not in headlines, but in everyday life, in rent, in groceries, in the feeling that no matter how hard you work, you're falling behind. This is not an accident. It's the cost of keeping the system alive. And now we reach the most uncomfortable truth. Here's the truth most people aren't told. This system was never designed to end. It was designed to continue. Not in a healthy way, not in a fair way, but in a controlled one. A loud collapse would force accountability. It would trigger panic, and panic breaks control. So instead, the system chooses silence. Slow inflation, quiet dilution, invisible loss. This is why the crisis doesn't look like a crisis. There are no breadlines, no bank runs, no official declarations, just a steady decline disguised as normal life. The uncomfortable truth is this. The system survives by transferring pressure downward. Governments protect balance sheets, banks protect liquidity, markets protect valuations, and the cost moves quietly, to wages, to savings, to the future. This is why working harder doesn't feel like progress anymore, why stability feels temporary, why the middle slowly disappears. The crisis isn't coming. It's already here, but it doesn't arrive as a moment. It arrives as a feeling, a sense that the rules changed without anyone telling you. And by the time it's obvious, adaptation has already been forced. This is the silent crisis, and it's shaping the next decade. So what does a silent crisis actually look like in everyday life? It looks like working more, but owning less. It looks like higher wages that never feel higher. It looks like housing becoming a financial product, not a place to live. Like savings turning into risk, and stability turning into something temporary. The silent crisis doesn't announce itself. It slowly reshapes expectations. People stop asking for growth and start asking for survival. This isn't about panic. It's about awareness. Understanding the system doesn't mean escaping it, but it does mean seeing it clearly. Because systems don't change when people are confused. They change when reality becomes impossible to ignore. The next decade won't be defined by a single crash. It will be defined by adaptation. The question isn't whether the system survives, it's who carries the cost. Welcome to Financial Room.